Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. It's a TGIF, folks. Got our man, Mr. Dave White, with us, a tech expert at TFNN. We're going to be growling and prowling with you out here. Let's take a look at one of our quotes and see what we have out here. So this is an unknown quote. To start a better life or a better world or a better future is simply to believe that it is possible. We don't even know how strong we are, right?
Nope.
I know. It's pretty amazing. Market-wise, let's take a look at it out here. We had the Dow down 56, NASDAQ up 9, S&P's off 8. Gold contract down $4.30, traded $1,170 an ounce. Silver off 5 cents at $16.05. Platinum down $5 at $1,094 an ounce. Light sweet crude up 93 cents, trading at $58.93 a barrel. Bonds are toasted, roasted, all of the above. ABC structure on the way down. The 10 years off 27 ticks, 125.02. 30 years down 1 full point and 23 ticks at 149.21. And King Dollar's up 867 ticks at a price point of 96.36. It had been up 1,500 ticks, folks. Couldn't handle it. Euro is down 120 at 111, and the yen is up a penny and a quarter at 125.06. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Bottom line, folks, if you take a look at the SPY, your SPY's at 209.77. We had volume in the marketplace. Really subtle today, man. Sideways move, but guess what? They're unloading it, baby. 760 million versus 720 in the NYSE. 1.8 versus 1.8 in the NASDAQ for Friday in the summer.
They hammered it down. They got it up to 2,100 on the cash.
Yeah.
And then boom, 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 right back at it. And the rest of the day it was
flattening out.
I'll let you have a little. I'll let you have a little.
Exactly.
Just put a little out there all the time.
And so what we have here, folks, now is the cash S&P is under the 93.55, and we're only under it by a point. But what that does is that puts it in the lower end of the consolidation. So it's like, oh baby, because that lower end. So here's the two parts of the consolidation, folks. When we take a look at this, bring this back a bit. So on the cash S&P, we're at 2092. 2044 is the first consolidation, the lower part, which is not the end of the world, okay? That's only, what, $50? $50. The second consolidation, however, where we were trading in February and in December of last year is 1972. Now, a close where we close today on a weekly basis saying, guess what? You're dealing with 100 S&P points down.
And we had a 280,000 tick on the jobs number.
Yeah.
And of course, we've got a Fed meeting on the 17th of this month.
Yeah.
So they only got about, 7 days or 10 days or whatever before we are into that.
Right.
And they're going to have to come up with an excuse if they're not going to raise rates, because it couldn't have been a more perfect number that said that they needed to raise sooner than later.
Right. And they're not going to. The thing is, what
they're going to try to come up with something, right?
Well, they have to, I guess. Okay. I think the market itself will save them, because what has happened is that the bonds are getting croaked.
Right.
So the 10-year right now is at 2.4. We just went from 2 to 2.4. That's percentage-wise, that's a 20% move.
Right. But one of the other things, in fact, I had a caller call in a little bit, but get your opinion on it. But what I told him was, you just had bonds break a 30, 35-year trend line.
Yes.
Do you play something like this for short money, or is it like gold, which is my opinion?
Yeah. No.
That when we saw gold come off a 10-year do nothing.
Right.
Do you just play it for the first easy 10 cents and then walk away? To me, especially in the bonds, even now, you've got to be thinking long term.
I agree.
And if you're taking a little money, then I think you're basically trying to pick up dollars in front of a bulldozer, right? You want to be thinking the long term on that.
I would agree.
Move.
And you don't get a lot of chances like that in the marketplace. That's the other side of it. Now, in order to do that, then you're going to have to get creative, though, with a real type of long-term strategy that won't kill you if it doesn't fall apart right here and right now. Do you know what I'm saying?
Well, I mean, you could do something like the TLT or something like that, right?
You could do the TLT. Yeah, because the TLT is in a monster ABC structure on the way down. You could do the TLT. You could, the TLT broke with volume. Right now, we're at 117. 110's the number. Let's go look at this, because this is where you can, we could do an option show now. Because see, this is where, folks, okay, if you're right on the aspect of it, let me just see how far we can go out with these options. Because what you'd be doing, you could create a synthetic short and collect premium the whole time.
It would just be my thought that in fact, let me put it this way, it put me back to the time where we were buying BGO, a gold stock, for a quarter, and I sold it at $2 and thought I was a king, and of course it went to $6 by the time it was all done.
Yeah.
It's, especially when you get these monster turns in markets like bonds that like to trend as long as they do. It just seems to me that everybody's very short-sighted about what's probably longer on the bonds, and by implication, the equities on the opposite side of that.
Right, and so the way that you can do that, you can do both. I mean, you can trade the heck out of it and have some long-term, positions and trade around it. Because what does happen there is that your cash flow would stay really good. Now, you are giving up, right, what you're talking about, because we know that each and every time that you get in the market, the risk goes higher versus, like laying a nice strategy out and saying, okay, man, I'm going to be in here for a year and a half. I'm going to, set it up and have stops in. We're not saying having stops in.
I'm not a big bond trader, never have been, probably never will be.
Yeah.
But
they're fun.
But what is a trend on it? Is it going to be a 5 or 10 year trend off this bottom, or is it just going to correct in 2 years and be over?
Well, here, if we bring this up, I'm going to put the 30-year up, folks, and I'm going to put the 30-year up, and this would be the big juice that you go after. So what we're going to do here, I'm going to put the 30-year up for you, and I'm going to put it up right from the beginning of the bull market, okay, which is just a mind blower, because we got to go back 30 years. And what you're going to see is that, we were at 74. So bonds went for 74. When I'm saying 74, so check this out. You're paying $74 for a $100 bond. And that's $74, you're getting 14% interest. And that's a $100 bond, by the way, okay? So that went from 74 up to $1.64.
Right.
Okay? Now, on the way down, you first, I'll bring this in closer so we can see this. Your first correlation is we just made it this week. This is what's going to be a mind blower here. We got inside the lower range.
Yeah.
So your first correlation, you're at 151, is, guess what? Is a monster move, is 127. Now,
would you see a symmetrical time frame, or coming back down
faster?
Yeah. Because it's everybody keeps talking about bonds being illiquid today, and I really don't have a frame of reference to go after that.
Okay, so when you're hearing that, what they're saying, folks, is that you and I trade in the bonds. You can trade in and out of these and be liquid by 100 contracts in a second. What is illiquid are the corporate bonds.
Okay.
And they won't be able to get out of them. There's no one, treasuries, what happens, everyone's going to get their money back, okay? But like Bill Gross couldn't get out of treasuries. If you and I were Bill Gross, we couldn't. On the futures market, yeah, you're going to be able to get out 50, 100 contracts, but they have thousands. I mean, it's more than thousands.
I always speculated that Bill Gross acted like he was nuts to get out before he was trapped over there at PIMCO and all these things. And maybe he's just smart like a fox and acted like an idiot to get out before all this stuff stuck to him like tar.
I agree, man. Yeah.
Maybe he's that smart?
Yeah.
Or maybe he's truly nuts.
No. He's probably both. I mean, you can't stay in this, business for that long without being,
a little nuts.
Yeah, right. I mean, that just happens, folks. That's real. That's just, it's just a different MO. It's just how it works. But I suspect, it's not like bonds are going to go back to 14%. But the first moves, which we're in right now, you can absolutely see that,
well, percentage-wise, they're massive, right?
Exactly. Percentage-wise, it's massive, okay? And I think that whole number has to do with inflation. Man, food's so expensive, it's unbelievable. I mean, you can look around and say deflation's out here. Well, guess what? Not if you eat.
Nope. Eggs doubled 100%.
Yeah.
Yesterday.
And you got to eat eggs.
Yeah.
Hey, how's that Brazilian steakhouse? They double yet on Sunday? That Brazilian steakhouse looking even better, right? I know. Dave White, Tom O'Brien, you stay right there, folks. We're coming right back.